Good afternoon. 6/23 of 2019. And what do I have? I have Amazon.com, which on Options Friday, just the other day, the high was 1925 and the low was 1907. Here's the deal right now. The money flow on Amazon on Friday was 1,923,970,000 there, $489. Okay, so basically, just so you know, we traded it every single day because the options move big for us and we make lots of money. Let me just say one thing that had 101 highs and 39 lows on Friday. The trading range was only $18.37 for intraday, which is not that big for Amazon of late. It did close down. Last print was 911.30. Let me go ahead and let's talk about the weekly chart. That 10-week moving average is very significant right here, right now, and at this moment. That 10-week moving average at 1871.7 on this weekly chart. We can clearly see when they shook this thing down, we rebounded off of this 100-week moving average, and that was 3 weeks ago. What a big downslide that was. And as a matter of fact, as we were saying, we made this top right here. Now, if I draw this trend line down here, it goes just like this. And it will go just like that. So we got 2 weeks on the other side. This was the downside. And on this side of the trend line, you could see that we have 2 weeks up. You could see that the 50-week moving average in the black there is 1762. You can see the red line there is a 20-week moving average at 1788. And then the one down here below it is what we refer to as a 40-week moving average at 1730. Now, the key for this trade tomorrow morning is how Amazon is going to take out that 10-week moving average. Now, as we have been rallying on every rally, we could see how we got to these highs and then came right back down. But that 10-week moving average has been rising in value with the overall 8 weeks here that we have and whatnot. So that means that the 20-week, 50, these are going to be major support levels. When does Amazon make its biggest move? Is when it breaks clean above this 10-week moving average, and that we would break these highs over here at 19, let's just call it 1965. That means that the call options still have another big trade in it, and we're going to be all over it. One thing that we have had is a good weekly buy signal. The option trading on this thing makes more money. Why? We trade the ones that have what we call stock intraday price ranges. The higher the ranges, the better that the options trade. And you make money consistently, consecutively, and whatnot. So if I take this here right at the body of this candle, and I come straight up here, this is where it goes. It goes right there. Now, we're right in here. We can refer to this as an apex or whatever you like. But once we break up through that resistance level, this baby's going to take off. And or at support levels, this thing is going to bounce off support big time. It's a good way to make money. It has the least amount of risk. The stock can recover. The options are going to trade excellent on this. And we look to see what kind of trades that we'll get tomorrow morning on 6/24, last week of June. And we've had that 3-week rally straight up. So when you take a look at the bear reversal here, which was on the 6th week here, at that bottom on that 100-week moving average, it was time to take off to the races. And we broke the trend line right here. We're on the other side of this diagonal line off of those highs. And it's just perfect. So this is where either you go up and you break out real hard, or you break below this line right here that I'm showing. It's only going to be one or the other. But once again, great stock, great everything about it, great setup. Time for you to get with it.